Let's get across what is moving markets, certainly from a macro perspective. Peter Maguire joining us from XM. Pete, good to catch up with you as we always do at the beginning of the trading week. And as I said, all about those imminent US interest rate cuts. What did you make of those comments from Jerome Powell?
Well, good morning, Andrew. I made that we're going to see cuts in September. If I listen to Pat Harker, the old Wharton dean, and he's the Philadelphia Fed president, he's saying you don't need 50. There's other members that are saying that you do need 50. So there's about a 26% probability of 50 basis point cut. The other 74% run into a 25 basis point cut. So it's pretty much baked in. US dollar sold off massively. It's now in the hundreds. Could even hit 99s, I think, probably leading up to the meeting. So yeah, it's certainly game on for traders.
Yeah, in fact, let's just take a look at that daily performance chart that you bring to us and just see what's performing and what's not at the moment.
Well, gold, you can't take your eyes off it. It's been extraordinary. Then it's back at all-time high level. Might be a couple of bucks out, Andrew, 25.50. WTI had a nice rally, and of course the geopolitical concerns with Lebanon and what's going on with Israel. You've got the US dollar and Aussie dollar. The Aussie dollar certainly taken a little bit of a leg up, and it's approaching that 68 handle. All the other dollars, of course, and the euro as well. And then everything, as you see, that dollar index being sold off heavily, the US dollar index. Bitcoin's well up, and US dollar yen, you got the yen sitting really tight there at about 143 and euro approaching 1.12. So yeah, it's an exciting week ahead, and US equities had a nice rally as well Friday night.
Indeed. So Pete, as I mentioned there, the focus certainly for the Fed is now turning to the jobs market rather than inflation. However, This week we're getting a series of inflation reads, certainly the PCE out of the States as well.
Absolutely, Andrew. You've got core PCE. I've just made some notes, unchanged at 2.6% year on year for June. It'll be likely to be the same for July. So there's the number there. And then you've got headline PCE figure is also forecast to have held steady at around 2.5% year on year. So as you mentioned, the inflation seems to be moving in relatively in the right direction, but the job disappointment, and when you had to revise those non-farm payrolls down 818,000 up until March of this year, they're damning. So maybe we're not getting the true picture as far as the severity and companies laying off in the States. We're getting very much a reality check.
Now, Pete, the other big event coming to us out of the States this week is that report from Nvidia with its earnings. Yeah. It's amazing, isn't it, that one company can move a market?
Absolutely, Andrew. I mean, it's been extraordinary when you're looking at the performance of it over the last 18 months and the whole AI agenda, and look at the stock. I mean, it's just one-way traffic. And certainly from this year as well. I mean, 23 was a great year for it, but if you're looking at the performance against, the Nasdaq and the S&P, it's like daylight second. So where does it move from here? Does it keep on growing at these sort of numbers? Hey, it's a hard train not to be on, because it's like a bullet train, and once you're on it, you get plenty of traction.
Indeed, it is. And look, elsewhere, of course, we've got further reads on inflation, Eurozone. What are we likely to see there? And I guess with a view to perhaps more easing from the ECB.
Yeah, I mean, I think, Andrew, as far as an inflation read, things are moving and certainly in the right direction for the Eurozone. But the trouble is, naturally, they'll see a 25 basis point cut pretty much baked in September. So we're going to see a lot of movement across central banks over the next, 30 to 50 day window up until the start, probably, or early October. And as you can see with the chart there, it's relatively okay. As far as that Eurozone inflation, well back, but it's got a fair way to fall to get back to the historical averages. But, at the present time, and that's why they're saying, well, it's probably manageable. And you've got to say, Andrew, with WTI and Brent still both under $80 and one nearly just on 75 at WTI, there hasn't been that big push up as far as high fuel costs, which would certainly dampen the Eurozone far deeper than what it currently is.
Elsewhere, Japan, of course, that is the Bank of Japan. There's the one central bank, at least, that would like to see inflation go up, not the other way. What are we likely to see, do you think?
Probably a little bit like the Swiss. Yeah, I wouldn't be surprised to see another, 15 basis point, 10 to 15 basis point hike by end of year. I think they'll sit on their hands a little bit. I mean, if you're looking at the stock market, it's recovered a great percentage of what that big wipeout about 3 weeks back. And then you're looking at the yen, Andrew, 143. So it's certainly strengthened considerably against that, 162 handle, nearly 20 yen against the US dollar in that, probably the best part of a month or so. So that's something for them to consider as well. But yeah, inflation maybe where they want it to be. Growth numbers are relatively okay, and we're saying, you will see a rate hike sometime by the end of 24.
And Pete, locally, we're also going to get a read on inflation, the monthly read. Of course, this comes ahead of the next RBA meeting.
Yes.
I guess the market's now accepting that perhaps the RBA is going to just leave rates on hold till the end of the year.
I think so, Andrew. I mean, that seems to be the general consensus, and people are even saying it's going to be into the first quarter as far as any form of cut. We'll just have to see the performance of the economy over the next 4 months leading into Christmas, and whether things change and take on board naturally what's happening as far as the performance of the Eurozone and, of course, China and the US. So, yeah, let's just sit on our hands, but I don't think the final card has been dealt yet by the croupiers. I think there's a little bit more excitement for the Aussie yet.
Yeah, all right. Do we want that? Do we want excitement?
We want excitement. Yeah. Today's a very rare day. If you look at numerically, 2 and 6, 26 is 8 month, and 2024 is 8. So it's 3 8s. Yeah. It only happens once a century. So numeric is very aligned with that.
Wow. All right. Finally, Pete, now, as we saw on Friday, very much risk on off the back of those comments from Jerome Powell. How did Bitcoin perform?
Well, Andrew, it had a big rally. I mean, it's 64.5, nearly approaching 65. So it's been strongly bid up over the weekend, and it seems to be on an upward trend at the moment. No one can deny what you've seen in the last week or so as far as big push-ups. So maybe there's further, that 70 is banging on the door again. The US dollar coming under further pressure, then that's certainly going to probably ignite gold and Bitcoin even higher.
Although, as you point out on this chart here, perhaps not doing as well as anticipated.
No, you've got to say that. I mean, you hit the 72, but that was the peak. You're only 8,000 or, the best part of about 11, 12% off its highs. So, yeah, it's got a bit of... it needs a bit of wind in its sails to get back to those sort of levels. But if you're looking well back to, where it was at 16,000, then boy, oh boy, it's been a recovery and a half, hasn't it?